Hey traders, Raghee here. Welcome to Charts and you guessed it, time to caffeinate and dominate. Thank you as always for joining us for our pre-market show Monday through Friday, 9 to 9:20. All right, let's get to it, shall we? The first thing to talk about is the hot zone that we're dealing with this morning. So let's take a look at that 5-minute chart. For those of you that haven't yet, and that's okay if you haven't yet, but if you haven't yet developed the habit of taking a look at the economic calendar in the morning and looking at what preceded the U.S. session and what we have to deal with in terms of today's session, the 10th, Forex Factory is a great calendar. Trading Economics is a great calendar. You'll notice here, Wednesday, we do have crude oil inventories. We sure do. But before that, 2 hours before that, CPI. Anything that's going to map to inflation, PCE, CPI, these are going to be significant market movers. ISM data has been a significant market mover as well. So we take a look at this. We know, look, I'm not particularly concerned about the number itself, right? There's a lot of talk about how long ago inflation peaked. It doesn't really matter. What really matters is what we talk about, and let me take you back on over here, what we talk about by way of what does that mean, right? So inflation peaked or didn't. What does that really matter to us as traders, as investors? It matters how the Federal Reserve sees it. It matters where we can measure it. And a lot of times, if we're looking at the data mapping directly to the market, the response can seem a little backwards. That's because really there's an important pit stop we have to make, and that is, what does the end of the year look like in terms of where the target rate probability is going to be? Now, just yesterday, let me grab my drawing tools here because this is huge, gang. You want to understand macroeconomics. You want to understand, what inflation actually means. The number itself, really not that important. How it maps forward to Federal Reserve messaging, FOMC decisions, that's where we have to be aware of it. So take a look. Yesterday, we landed square back in this column. This is where we were. Equities weren't happy. We were favoring the more hawkish side of this graph, okay? And that's also bearish for stonks, yeah? Okay. This way is the more, I won't call it dovish, it's just the less hawkish side, all right? So this is less hawk-like, all right? And equities love it. Why? Because fewer rate hikes mean less of a tightening cycle, less of an aggressive tightening cycle. So yesterday, we were here. Stocks really didn't like it. In fact, this next column here, 3 3/4 to 4%, right? The 375 to 400 basis point column was probably almost twice, if not 3 times as tall as it is right now. Look who's come on strong. Now, not only has a 3 1/4 to 3.5 column overtaken where we were yesterday, it's right now, come December, right back to where we think the Federal Reserve is going to be. Now, what does that even mean? This means that based on what we've been expecting most of the year, which is this column, this is 1/4 point less a hike. That's all that means. You think stocks are going to like that? Hey, this is all breaking down where growth, jobs, inflation actually maps to. This is why we care about those numbers, because it's going to tell us what the Federal Reserve is going to do. We have a narrative. We have an idea based on the data, and then we confirm it. We confirm it with price. And this is the step that a lot of macroeconomic analysts don't do, right? They just talk about the macro and then they leave it be. But that presumes that macro is even being paid attention to and is affecting the market in the way that their hypothesis suggests. What's up, Cat? All right, hang on. The cat wants out of the office. All right, what's up, Cat? You want out? I'm right in the middle of the show. All right. This is the, anyone who has a cat, when the cat wants something, there's just no getting around it. So this is where we return to, and is price agreeing with that narrative that I just told you? Yeah, big time. That's how you understand macroeconomic rate of change, and then check that against what's happening in the market. And it's interesting because one of the things that we've been doing now for 2 weeks in the Sector Secrets Masteries, we've been saying, look, no more, you can't even, finding downtrends is actually difficult. Finding chop is most common. And there is a growing number of uptrends. So one of the things we talked about in our longer term conversation, so weekly, yes, but also swing trading that we do every Tuesday afternoon going into the close, we said, hey, what does our double green uptrend watch list look like? What did it look like last Tuesday when we did this? What does it look like now? We actually have the NASDAQ that went double green. The S&P closed double green yesterday. So NQ has been double green for just a bit. ES is a fresh double green. And today's price action's going to help with traction as long as we end higher on today's session. XLK is double green. SMH is double green. XLY. So what's happening is more indices, more sectors, and quite a few more stocks are organizing into an uptrend. This is the watch list that we're going to take into September, right? And this is mapping to what? Fewer rate hikes from the Fed. Do we care about recession? Heck, we don't even know what that means anymore. How can we be scared of the monster if we don't even know what the monster is? Don't know, right? So we're always told to be scared of some dark at the top of the stairs. Of course, that's what financial media is designed to do. If we look at rate of change, and we look at where the data is mapping to the FOMC decisions on rates, that's what we need to know. And that right now is telling us things are looking a little bit better to the upside. Not that we're never going to pull back again, but what that means is we turn into an uptrend. We do get what is inevitably going to be some retracements, some sell-off, some weakness. That is a buy the dip, right? This isn't chop any longer across the entire marketplace. We're starting to see organization that is bullish, that opens the door to buy the dip. And that's where we are right now. And I'm pretty excited about the clarity. Look, I don't care if it's downtrending clarity. I don't care if it's uptrending clarity, but the clarity is coming. And that's where I'm really excited about where we're heading as we go into the fall trading season. All right, so let's kick it off with some questions. Hey, by the way, I'm just curious if y'all care one way or the other. I usually minimize myself down there into the corner. I don't know if it matters one way or the other to you all as far as the sizing of our show here. I think this is a better view, but feel free to let me know what view you like. I think this one works. All right. I'm just trying to make sure the charts fit. All right. So Karthik, good morning. Did you get a chance to nibble on any SMH or related stocks yesterday in the pullback? Karthik, if I did, it would be an alert. And I will say, and there is not going to be a trade that I'm going to talk about, humble brag about. I have a rule, right? I have a rule in my room, any room that I'm in, no post, no boast, right? So you're never going to hear me talk about trades that I've made somewhere off in the corner without letting you all know. So you would have gotten an alert. That's the way I roll. But to your point, do we like SMH? Yeah, we absolutely like SMH. And going forward, I'm not going to presume we're never going to get a pullback again. We are going to get a pullback, right? We are going to see weakness from time to time. So SMH does look good. And that's something that I'm sure we'll talk about in live trading. And then if we crack open the SMH, and for those of you that are in the mastery, we sent out that updated watch list. Gang, 80% of your time as a trader really should be built fine-tuning and working on that watch list. What most traders do is they spend 20% of the time thinking about what they're going to trade and 80% of the time trading. And then they wonder why things aren't going well. You want to flip that around. Trading itself, pushing the buy, pushing the sell button, should really, from a time perspective, be a very small percentage of your time in your trading endeavor. Most of it needs to be, what am I trading and why? And then where am I going to enter? So you all have that list. And once you've got that, now you know what to keep an eye on. So now we have a focus. As I say, if you're focusing on too many things, you're really not focusing on anything at all, right? So if I'm scanning the market amongst 1,000 stocks, I'm really not getting anything effectively done until we can whittle that down to a few names, and those are the names we focus on. All right, that being said, look at all the double green in SMH. There's probably a number of different opportunities waiting here for us. AMD catches my eye. TXN catches my eye. The names in this group are a little spendy, unfortunately. SMH itself, as the tide, might be the best bang for our buck. So I'll definitely be keeping an eye on that. All right, Bob. So a better CPI, stronger, higher CPI is negative. A lower CPI is positive, because higher CPI, more inflation, lower CPI, less inflation. So better in this context is lower. You got it. To the market means less rate hikes. That's not what I'm saying. That's not what I'm thinking, right? That's what we see. Remember, we always need to map to what's happening in terms of a response. But yes, that's it. Is it going to be a lower dollar? Well, if we're not going to hike as much, generally speaking, less hawkishness from a central bank does generally is perceived as not as bullish to the country's currency. So yes, good for the markets, bullish for the markets, somewhat bearish or neutral for the currency. Now remember, when we're talking about the US dollar, it's never just the dollar we're talking about. That's a very common misconception about dollar analysis and trading. It's the dollar versus euro, yen, pound. So the dollar can remain strong as long as euro, yen, pound are weaker than it. And that throws off a lot of traders thinking, wait, shouldn't the dollar move lower? Only if the euro, yen, and pound are moving higher against it. So you've got to keep an eye on 6E, 6Y, 6B to understand where the dollar is going next. So yes, generally speaking, you got it there, Bob. You got it. Is there any place where you could stay in tune with the amount of reduced M2? Yeah, the Fred data, St. Louis Federal Reserve has all these. So Bob, what you can do is just Google Fred M2 or Fred, F-R-E-D, money supply, and you'll get a link that pops out. Hey, thank you for the Stumptown recommendation. That's what I've got here. I've got the Founders Blend today. That's Stumptown Organic. Amazing. And I make mud. I add a lot of coffee to my coffee. And it's just even hard to make bitter. I appreciate that. It's excellent, isn't it? Probably the best I've had. All right. So look at the probability for the 50 basis point. Yep. So keep an eye on that Federal Reserve, that FOMC watch, the target rate probabilities chart that I show you all a lot. Keep an eye on that. And absolutely, Sachin. What are my thoughts about natty gas, UNG? Sure, we're going to start at NG, and then we can migrate over to UNG. NG, natural gas futures, right? Natural gas futures it's a very volatile contract, by the way. I don't want anybody thinking it's, look at this. It's a very volatile contract. It's double green. Yes. I usually recommend to traders who are not accustomed to trading natty gas to play UNG options or NG options. I'd highly recommend going the option route into natty gas, whose nickname is the Widowmaker. I don't know if that's not a warning. What is? However, do I like the buy? Absolutely. Double green, pull back. Now, we talk about this idea of a regression to the mean, right? That outliers will self-correct over time. That's all that it is. Regression to the mean, reversion to the mean, retracement, whatever you want to call it, they're going to correct over time. And this is exactly what that is. And I was curious if there was some symmetry with the amount of distance closed. It's pretty close. The size of the candles, however, that's not a trickling down, is it? Right, Sue? It's not a trickling down. Boom, boom, we're selling off. we probably want to see a doji or an inside day or a minor low pattern in the wave, or again, go only about an aggro type position size, because the size of the candles merit really two things: some patience, and then I would Google natural gas and just say, what's the narrative behind this? Because those are pretty dramatic moves. And of course, you'll see that map over to UNG, where you can pull up the UNG option chain. And I would keep any entry in this area. Give yourself time. Ideally, you can go out to say October. September is the closest that I will go. It's only about 30 some odd days to expiration. So I would go out to October. I'd look at, say, the 24, 20, probably the 23 strike, and start building a trade around that from an aggro standpoint. And by the way, gang, if what we're doing here clicks, it resonates, it makes sense, yeah, come check out what we're doing over at the Sector Secrets Mastery. You can check out, I've got an easier link to get to. It's sectorsecrets.com. All right, what are my thoughts on Amazon? It's double green, first of all, right? We take a look at Amazon. It's double green. The overall uptrend is in play. It's fresh, but remember also, not only is the NASDAQ double green, XLY is double green, and now one of the big stocks within those two, the index in that sector, double green, north of the 200 propulsion. It's soon, it's early, right? But it's buy the dip. And buy the dip is valid. And by the way, once we start talking about buy the dip, once we start talking about we have a trend, and what's the vernacular for a trend in Raghee land? Double green, double red, right? That's the lingo. That's the techno babble. What do we stop talking about? We stop talking about oscillators. Do yourselves a favor, for crying out loud. When the market starts trending, stop thinking in overbought, oversold terms. Stop thinking about whether or not a slow stochastic is overbought or oversold. It's the wrong club for the shot, right? Great club in chop. Once we turn into a trend, start thinking like a trend follower. Trend followers don't give a rip what an oscillator is doing. Even the name reminds us, oh, I use an oscillator when the markets are stuck in a range and oscillating, not when they take on the imbalance of a trend. And trends are imbalanced, right? So buy the dip is becoming more and more clear, right? More and more clear. All right, next up is good morning, Claire. What are my thoughts on Twitter? Well, I tweeted today. That's my first thought. It's still chop coming out of a downtrend. We're coming up at the resistance of the 200 exponential. So mildly bearish, but much like many sectors and stocks that have not gone double green yet, they're on the edge. They're on the very edge of having enough green grab candles, having propulsion dots indicating that the 8 exponential moving average has crossed the 21. These are all those little clues that there is bullishness organizing. But the end result of that sentiment getting bullish and that momentum getting bullish is finally the trend. That's the very, very, very last thing to shift. And that's the way it should be. Trends should not be twitchy. Momentum can be twitchy. Sentiment, of course, is extremely twitchy, but the trend has to be a little bit more discerning. We are on, I think, the very edge of the tripwire of that 34 joining the party and telling us we're going to move higher. So be careful about a short, but it would be a short or nothing, right? Flat is a position. Short would be the choice really here, okay? Hey there, Al. Does double green environment moving into an uptrend make my put the slow stochastic away? You bet, 100%. Yeah, great question. I was just talking about that. You got it. That's exactly what we need to do. Any oscillator. I'm not just singling out, the classic slow stow that I prefer to use. It's a free tool. It's built into most platforms. Just do yourself a favor. The secret sauce in this free tool is the setting. 80 overbought, 20 oversold, 21K, 3D, listen to me now, believe me later. It's a very powerful setting, and I've been using it for decades, for many, many seasons of the market. So yes, but any oscillator you do want to put away. All right, gang. So just like that, we are going to head on over. I'm going to head on over into the Sector Secrets Mastery room. Jake, I saw your question there. Do I day trade in the room every day? I do. I day trade in the Sector Secrets Mastery, my favorite hour of the day, every morning. You can check out the free video if you want to get an idea of what the kind of trades we're putting on. Jake, last night, the free video was, let's see, what was the free video? And that'll give you an idea of, the kind of trading that I do in the room. There you go. I wanted to talk about losing yesterday. We had one winner and one loser. We lost, had a small loser in gold, and I probably spent more than half the video talking about losing well is the skill, right? Not predicting, not bragging, not winners only. I love talking about losers. My members will tell you, because that's the best thing that I can teach you, how to lose well. We had a small loser in gold, right? And we had a 150 plus point winner in the NAS. Do the math. Do I mind about a small loser in gold if we had a 150 point plus winner in the NAS? Not even a little bit. So if you want to know what kind of trading we're doing in there, what kind of trades I walk the members through, and that's going to be a great video to watch. It's called Losing Well is the Skill, right? One of my favorite topics. One thing I will tell you, gang, traders who don't like to talk about losers lose a lot. Yeah, that's the reality. They lose a lot because they don't want to talk about it. I don't blame them. I wouldn't either. But the best thing that I can share with you is how to control risk. That's the game. Gang, have a great one. Caffeinate and dominate. We are in a very wonky post-CPI environment. Be careful. Remember, we're going to see a lot of adjustments being made to expectations about what the Federal Reserve is going to do. I'll see you tomorrow. Same time, same station. Be good to each other.